Had to unmute myself. Hi, this is Nick Katko from BMA, and welcome to our April webinar on the principles, practices, and tools of a value stream management system. The first thing I'd like to do is the technical check. Can you see me? Can you hear me? Can you see my screen? If you can drop that into the questions. All right. Thanks for replying. All right. I am battling some illness, so my voice might sound different, and I may have to like mute and or briefly pause to deal with cough, something like that. And I'll try to make sure I mute myself so it doesn't sound horrible during the webinar. All right, so let's get going. So for those of you who are regular attendees of the webinar, you understand all this. For anyone who's new or watching the recording, the handouts are available. A copy of the handout is available in your control panel. You can download it. If you're watching a recording or you forget to do this, just send me an email and I will be glad to send you a copy of the presentation. If you want continuing education credit for this webinar, you have to answer 3 of the 4 polling questions, which will come up. And then, of course, send me an email and I'll be glad to I'll send out a certificate. If by some chance you'd just like a certificate of attendance, I'll also be able to send that out to you as needed. All right, so what are we going to learn today? First, how to go about identifying your company's value streams, how to create a value stream organization. Value stream management really is nothing without understanding value streams. The value stream profit equation, how do, value streams serve lots of purposes in a company. From a financial viewpoint, they are the profit centers of the company. It's important to understand how they make money. How accounting needs to use leader standard work to sort of change how it is integrated into the organization, and how accounting can become financial coaches. Then we'll do wrap up during the, I'll do questions at the end, but I'll also look at the questions during the polling questions. Hold on 1 second, please. All righty, let's keep going. So what is value stream management? Let's get a clear, concise definition of that. It is really the integration of lean practices and tools with lean accounting, or you can look at it the other way around. So if you think about lean as a system, it's really made up of 4 what I would call subsystems. One is a daily lean management system. This is about controlling processes, creating stability in your processes on a daily basis. Then there's the continuous improvement system. How are you improving process performance using PDCA, lean problem solving? Then there's this management system, various tools and practices, value streams, the roles of team, manager standard work, respect for people. Then there's this planning system. You think of it as strategy deployment or Hoshin, where you have strategic improvement initiatives to achieve leaps in improvement. And the the plan for the year in strategy deployment drives the priority improvement events in the continuous improvement system. And then it also, eventually works its way down to what are the basic controls and what are the basic levels of stability and control we need on a daily basis to basically link everything together. So that's your lean system. So how does lean accounting integrate with this? So if you think about daily lean management, what comes out of lean accounting are the daily lean performance measurements. They need to be integrated and used to help measure stability and control. Now, this also means that accounting and finance need to understand this. Okay, they don't need to be experts in daily lean management, but they need to understand how the purpose of these measures, how they're used, and what benefit accounting can derive from understanding these measurements and what happens in daily lean management. What I like to say when I'm working with companies is that your daily lean management system, like your huddles and your visual boards, they're sort of leading indicators of both good financial results and maybe not so good financial results. If you pay attention on a daily basis, you get a good idea of how things are going to turn out financially. Not to the exact dollar value, but are we going to hit? Are we meeting schedule attainment? It means we're shipping according to schedule, or we're providing services. In terms of cost drivers, that's the other thing you find out. The continuous improvement system. Looking at using your box scores and looking at weekly lean performance measurements. Are we moving these measures in the right direction? That's the big connection there. I always say continuous improvement and Kaizen events has to be a numbers-driven process. Are you using the right numbers? In terms of managing analysis and decision-making, using the box scores, making sure that box scores are integrated and used in all analytical practices. And when it comes to strategy deployment, your lean performance measurement linkage charts should be integrated into strategy deployment. And if your strategy deployment process includes a monthly review or maybe a quarterly review, you should be using your monthly or quarterly value stream box scores to understand, are we hitting our targets or not? Do we need to make adjustments? Now, this sort of sounds complicated, but if you think of each of these systems as a plan, do, check, adjust system, makes everything a little bit easier to understand. So we're going to talk more about strategy deployment in, I forgot when, it's either the May or the June webinar. It's the June webinar. So strategy deployment or Hoshin, what happens? The plan step, leaders set the annual objectives and targets using corporate lean performance measurements, and what are the key initiatives? Then it gets cascaded down to the value stream level, where the value stream teams have to take those corporate initiatives and say, what do we need to improve? And how much do our measurements need to improve? And then there's this catchball process between sort of like value streams and senior leaders where they achieve consensus. For example, if senior leaders want to see a 30% increase in on-time delivery company-wide, but one value stream doesn't feel like it can get to 30% for whatever reason, there has to be a discussion to agree upon what level of improvement is acceptable. And then the adjust step for overall strategy deployment is really an allocation of resources, time, and effort to the improvements. And you're really prioritizing Kaizen events here. What are the big Kaizen events we're going to work on? You may not have them all planned out, but you have a general idea. So the improving the value stream. So you have where the plan step is you create a future state value stream map. You also create a future state box score. A future state value stream map is a design process, but it needs to, you need to be able to measure what it's going to achieve, whether it's improvement in operational performance, capacity performance, and or financial performance. And from there, you can set quarterly improvement targets, or maybe you do your future state map every 3 months or every 6 months, but then you plan the improvement events. The do step, you conduct those improvement events, and you have the planned events, and maybe you even have some what I would call bottom-up continuous improvement events that percolate up throughout, just operations. Your check is the value stream team meeting, weekly basis, maybe monthly basis. You're reviewing the box score, you're reviewing operations, you're reviewing the improvement activities. How are you doing against specific targets? Are we making progress or not? And then that creates the adjust step. Do we need to focus on operational improvements? Do we need to adjust any of our planned events? So again, it's a PDCA cycle. Now weekly may seem too much. It really depends on the level of activity, improvement activities, and lean practices that you have in place. Monthly may be too long. Again, it's the check and adjust that you really have to get down. That's the purpose of the meeting. Because you don't want to meet once a month and find out something that happened 3 weeks ago. You just realized, oh, we have to deal with it. Well, you've lost, 3 weeks of adjust time. Then the daily lean management process, where you're balancing daily demand with capacity. What is our plan to get work done today? And it needs to be balanced. It's not about overburdening any process with too much work to do. Now, I'm not saying that there aren't some days when you have to work overtime or whatever. So you're balancing. What's the plan for today? The do step, you execute the work, and what's really important here is that as problems surface during the day, you have standard responses to those problems. If we have a quality problem, and it doesn't matter if it's in an administrative process or a manufacturing process or a service process. If we have a quality problem, how do we respond today? What do we do? Your daily huddle is your check and adjust. Okay, you're reviewing daily performance. You want to do basic root cause identification of problems. You want to understand the difference between trends and noise. Okay. Okay. I mean, you don't have to overreact to every single problem that occurs. The question is, what's our response? So you adjust the schedule for the next day. You identify specific improvements you can work on, or for recurring problems, you might escalate those problems to your value stream team for support and help. So that leads us to our first polling question. And all of the polling questions today, you can choose more than one answer. It's not a single multiple choice. So I'm going to launch the poll. So what does your company have in place? You have strategy deployment Hoshin in place, daily lean management, continuous improvement. All righty, give you a few more seconds to respond. All right, so those are the responses. Good. Be interesting. I'd wonder, maybe you can. How effective do you think these are? Anybody, you can put a question in there. Do you think they're effective? Do you think you can improve them? I guess, well, that's more of a discussion. We really don't have time to do it, but so let me hide the results and move on. All right, identifying your value streams. I've been doing the lean accounting work with BMA for almost 25 years, and I always find value stream identification to be either companies are all in on doing it the right way, or they want to sort of recreate the wheel and they want to do it their way just because they want to. So, first thing to understand is why are value streams important? So, the standard LEI definition of a value stream are the actions taken in the proper sequence at the proper time to create value for the customer. And this includes information to coordinate those actions. If you haven't identified your value streams, it's really, really important that before you go down the path of trying to identify it, that people understand what value streams are and what they aren't and what their purpose is. Now, what I like to do when I'm trying to get companies up to speed on value streams is relate them to the 5 lean principles. Principle number 1, customer value. If you're going to focus on creating value for the customer, your customers, it really would be good, and this might sound a little bit, elementary. It really would be good for everyone in the company to understand the steps that create value, because there's lots of steps inside any company that don't create value. Value streams, principle number 2, they become a primary unit of organization and management in a lean company. Now, you still have your corporate organizational structure. That doesn't necessarily disappear, but you have to organize and manage differently according to value streams. Why? Principle number 3 is about flow and pull. And basically, a simple way to think about all the different lean tools and practices, it's to flow customer orders through the value stream as fast as possible. And this is also true in administrative processes. It's true in healthcare. It's true in service industries. It's about the flow. And working at the rate that the customer wants, not trying to maximize utilization or efficiency. Pursuing perfection is about improving. You have to improve at the value stream level, because that's the only way you're really going to understand flow and make flow better. And finally, empowering employees. You really want to have strong value stream teams that can do all this and manage this. It is difficult to try to have a value stream view of the business through all of your existing corporate structure. So identifying value streams is a logical, rational exercise. There's standard work that is out there and it should be followed. Don't try to do it your own way. You want to get consensus through direct observation. You got to go out there and walk to understand your value streams. You want to avoid I think or we know. All right, or we got this down. Practical advice, avoid pulling rank, where senior leaders, for example, say, I know what our value streams are, or somebody says that. It's not about maintaining the status quo. Okay. You have to, I think the biggest problem I've seen in identifying value streams is companies or people may think that it means a corporate reorganization. It may threaten certain elements of corporate power politically. And, that's really why things get difficult. But follow the standard work and you'll get done. So what do you do? The best way to look at identifying value streams is, families of products or services with similar flow through resources. The idea of stapling yourself to an order. If you follow a customer order through the process, or if it's a service business, you follow the customer and understand the steps. You could look at resource-based, but I haven't had much success with that. There are general rules of thumb, value streams, 25 to 150 people. Usually there's up to 10 to 25% of revenue, could be more. Usually in companies, I've never seen more than 4 or 5 value streams per location. So the standard work. Observe. Walk the process backwards and forwards. And I purposely say backwards, do backwards first. Start in, like in manufacturing, what's the finished good, and see how it is built. If it's a service, walk backwards, and then walk it forwards. Document, what's the sequence of process steps. Now, you don't have to do this fancy at the beginning. You can do it on a wall chart with Post-it notes. You can have people writing it down, and then you go into a room and understand it. The idea is to get consensus, okay? You have a team that is doing this, and you want consensus of the team and consensus from leadership. I strongly suggest, if you don't have experience with this, whether it's someone in-house who's already done this, if you don't have that, get someone with experience to facilitate. Okay, it's sort of like going to school. Okay, if you went into school the first day of math class, and the teacher wasn't there, and it was like the students have to figure out what the lesson is, it wouldn't go very well. Next, what you want to do is create a value stream organization. So you identify the value streams. Now you want to create the organization around those value streams. Can't do just identifying the value stream doesn't change a thing in the company. You got to organize around them. So, most companies, the current state, you have your departmental organizational structure. And like I said earlier, that's not really suitable for value stream management or improvement. You have your structure that goes like this. Value streams work this way. So you need a method to organize this way. Why do you want to organize horizontally? Optimize value stream overall performance, serve customers better, drive improvement, create flow, and have the right reporting relationships. So what are your options? What I like to say, and in my experience, and even other people I've heard talk over the years, a value stream organization is somewhat of a matrixed organization. Okay, like I said, you don't blow up your organizational structure. That's very difficult to do. So how are you going to matrix? Okay, so you have options there. The department can be matrixed to the value stream. The value stream can be matrixed to the department or departments. Value stream teams with specialist coaches and subject matter experts. You can also have value streams without departments, okay? My focus usually is create strong teams, and you matrix the department to the value stream. The value stream is on top. So create strong self-directed work teams, okay? They have day-to-day operational management. They're accountable for meeting operational standards. They're responsible for basic problem solving and improvement. And they become the senior leadership team of the value stream. What does a value stream management team consist of? You need to have a value stream manager. That's all. Sometimes that's a difficult thing. A lot of times, because you're looking at the flow of products, especially in manufacturing, the value stream manager, is someone in production. Okay, nothing wrong with that, but you still need to build a strong team, because value stream is not just about production, it's also about serving customers and sales growth. So you have your direct reports in terms of operations, you have support, subject matter experts that need to be part of the team, like, for example, quality or maintenance. Other functional representation, it's always good to have some representation of sales, okay, to understand what's going on there. So this is a team that it's you're part of the team, it becomes part of your job, okay? It's not like you're taking someone out of sales and just putting them on the team full time. They need to attend the meetings. They need to understand what their responsibilities are to the team. So yes, if you create the teams, it's also good to make sure that, job descriptions and roles and responsibilities, that all this is included in addition to your quote unquote, regular work. What I like to say in terms of a value stream organization, if you think of the people who are doing the work, it needs to be crystal clear, where are they going to look on a daily basis for direction, advice, management? How is this going to occur? Are they going to look up the organizational chart, or are they going to look horizontal at a team? This is what needs to be crystal clear in your value stream organization. And if the people that are basically working in the value stream every single day, if they don't understand this, then you really haven't created a very good value stream organization. All right, let's go to polling question number 2. So what would you say is the current state of value streams in your company? So there was one question from Keith. For a company that has multiple brands, product families, would you typically organize value streams around the brands or product families? The short answer is probably yes, but what you want to do is, this is where it's very important to walk the process and understand you have your families or brands. What are the common resources, or what are the unique resources that they flow through, and what are the sort of the common resources? All right, I'm going to close the poll, share the results. Okay, good. All right, hide the results and get back to the presentation. All right, the value stream profit equation. How do value streams make money? That's what this is about. And again, I can't stress enough that this needs to be understood throughout the company, especially at the senior leadership level. Accounting and finance needs to understand this. This is why are value streams important? There's lots of lean reasons why. Here's the financial reasons why. So you think about a value stream, any process, okay? There's an order, there's a sequence of process steps, products that are shipped, or services are completed. That drives sales. Okay. The faster you flow those orders, the faster you generate the sales. And if you serve customers better, for example, if customers want short lead times, high on-time delivery, if that's what they want and you can deliver it, you have the opportunity to create a competitive advantage and drive sales more. This is something that I learned way back when 30 years ago as a CFO, when in a manufacturing company, we reduced our lead times, improved our on-time delivery, and just by doing that, in the space of about 3 years, our sales growth like tripled. We didn't change prices, we had the same basic products, but we were serving customers better than our competition. In terms of costs and actual costs, what drives the costs in the value stream? It's the resources, the people and the machines. And those resources are pretty much, those costs are pretty much fixed. Okay. So it's really a matter of how productive those resources are. So the more, and that's why it's important to understand value-added and non-value-added activities in a value stream. The more that you have your resources focused on the value-added activities, the more productive they will be. And how does this happen? You eliminate the non-value-added activities through continuous improvement. You create the capacity to do more, and that controls your costs. So, sales minus sales of the value stream less the actual value stream cost is the value stream profit. This is why I stress that value streams are the profit centers of lean companies. You can talk about business units and customer profitability. You can do all those analyses. This is really what it boils down to. And when everybody understands this, then they can have laser-like focus on driving the improvement of value stream profitability. In general, what do you want to do? You want to flow orders as fast as possible at the lowest cost. That's the magic that you're trying to unlock. What can you do? And improving financial performance. Okay, remember, continuous improvement drives financial improvement. It's not the other way around. Okay, so this whole idea of what I call like financial engineering, where you set these financial targets and you tell people you got to make the targets. That doesn't work in a lean company. It's the other way around. You can increase sales without increasing costs by creating capacity. You can reduce your fixed costs as a percentage of sales. You can reduce your variable costs, increase capacity, improve performance and increase capacity, improve cash flow. All of these are possibilities. But if you have the value stream profit equation in place, people will understand this. So, polling question number 3. So, in your company, which of the following groups do you think understands the economics of lean? All right, I'm going to close the poll. Well, first there's a question here. I think there's a question. All right, let me close the poll, share the results. And I am not surprised by these percentages. The reason I say that is I think typically lean leaders they intuitively understand the economics of lean. They may not articulate it in the way I just articulated it. But this is when I see this poll, I see opportunity in the fact that creating a conversation around the value stream profit equation, how lean makes money, is just as important in a company as the lean tools and practices. I mean, the lean tools and practices are all good, and I'm not downplaying any of that, but you got to sort of connect it back to the profitability of the company. And even if you're a nonprofit, okay, how does this help drive cost control, which is important in nonprofits? So I'm going to shift direction and talk a little bit about leader standard work for accounting and finance. Okay. Sometimes it's called manager standard work. So this is something that's out there in the lean world. There's books on it. There's basic practices. And I think in terms of the success of value stream management, it's really, really important for accounting to adopt leader standard work to really help drive and sustain value stream management. So what are basic leader standard work practices? Number one is go see. Go see the actual work being done in the actual place by the actual people. In other words, go to the Gemba. Learn. Leader standard work is an activity, but it's designed to go out there and really understand process performance, have relationships with people, understand problems, issues, and gaps. There's also the coaching side of this, developing people. And there's insight, opportunities for improvement. For accounting and finance, this is basically the opposite. And if you're accounting and finance people, I'm not trying to stereotype you, but this is the opposite of sitting at your desk, creating Excel worksheets, drawing conclusions on company performance and sort of dictating what needs to happen. Okay, this is about engagement and learning. The only way you drive improvement in financial performance is understanding the operational problems and issues. You gotta get out there. So what does accounting leader standard work look like? One, on a daily basis, do Gemba walks, attend daily huddles. On a weekly basis, you're part of value stream team meetings. On a monthly basis, if you have your strategy deployment monthly reviews, you're updating financial forecasts based on those reviews. This isn't about budgeting. This is about updating forecasts and taking into consideration improvements that are being made and how that may impact, you know, improvements in financial results. And then being part of Kaizen events, either being on the team or being the financial subject matter expert on call. You have Kaizen events, there's typically an operational focus. But the question is there, for the specific event, is there a direct financial impact or not? Or if you make operational improvements, what what financial benefits can come out of that in the future? So it's really important to structure this. Now, this doesn't mean that, every single person in accounting has to do a Gemba walk every day or attend daily huddles. It really depends on the size of your department and the size of your company. But you got to structure something. You got to get out there. This is about learning. This is about connecting operational with financial. And it works. The more that you do it, the more that you're going to learn. And it's a two-way learning. It's not just accounting learning, but it's also operations or operational teams learning from accounting. Now, you want to become a lean financial coach. What does that mean? So, you have your traditional financial management, which I described earlier about performing analysis, drawing conclusions, sort of dictating actions. There's an element of certainty and confidence. A lean financial coach, you're a coach. So you're trying to help others. You want them to become skilled problem solvers using PDCA, lean problem solving. You're there to learn too, okay? You ask open-ended questions, you coach in the Gemba, you have a learning mindset, humility. You don't have all the answers. You're searching for the answers. You're trying to coach, you're trying to make things better, both operationally and financially. Now, this comes from the coaching cycle, the 5 questions. This comes from the Toyota Kata books, which are really, really good to read to learn how to do this. Basically, you have 5 questions you want to understand. So what's the target? Where do we want to be? What's the current state? So and then there's the gap. So, and then what are the root causes that are preventing us from achieving the target? What are the next steps? Okay, what are we going to do? And then when can we go see what the specific next step is? So this is not necessarily long-term, it's, sort of short-term, okay? And you think about the different cycles. You have a daily cycle, you have a weekly cycle, you have a monthly cycle. And this is what you're trying to accomplish during each of those cycles. So basic coaching practices. Have a regular set schedule. Don't be irregular or when we have time. I know accounting and finance people are busy, but you got to make this part of your work. The structure, have structured coaching questions Don't be unstructured and meandering, and don't tell people. Go to the Gemba. Don't sit in your office, have people come in, or do it via email. You're trying to learn. You're using PDCA to learn. Don't go out there implementing your preconceived notions. So there's layers of standard work, okay, in at all levels of a company. And it's good to think this through, depending on how large your accounting and finance team is. The lower you are in terms of the sort of the structure of the accounting function, the more standard work you probably have. So if you think about like accounts payable and accounts receivable, you should attend cross-functional huddles, procure to pay in order to cash. That's what those abbreviations stand for. Participate in improvement events. Company that I work with, they recently moved offices around, and as opposed to purchasing and accounts payable being in different buildings, they're now really on the same floor of the same building. So as opposed to having a purchasing huddle daily and an accounts payable huddle daily, they now have what they call a procure to pay huddle on a daily basis. Your accounting managers, analysts, your cost accountants, they need a routine to attend huddles, provide value-added analysis, participate in improvement events. Your sort of controller level need to be part of value stream teams. Now, again, you manage, maybe your cost accountants can be that too. And then your CFO, the leader, periodic Gemba walks, periodically attend huddles, participate in improvement events. That's pretty much what accounting standard work looks like. Okay, let's do our final polling question. What's the current state of the role of accounting in your company? All right, give you a few more seconds to respond. So those results are not surprising. And again, there's opportunity, okay? Accounting needs to focus on reporting results. That's their main job. That's what when you get an accounting education, you become a certified public accountant, you work in public accounting, you understand all this. You can't let that slide. It's a matter of how can you create more capacity to do some of this other stuff. All right, so let's do just a quick wrap up. When I was, most of this I'm just going to show, back when Brian Maskell and I were working together, we sort of created this value stream management training education. And I pulled out some of the old slides, and they're still relevant today. Value stream management is about using PDCA at all of these levels. So, here's really how the strategic piece works, sort of like a flow chart. You got the company strategic plan, you do strategy deployment, you create A3s for each location, you create future state box scores at the value stream level. From there, you derive your future state maps and your improvement plan. You conduct the Kaizen events. The results show up in your actual weekly box score. On a monthly basis, you're doing sales operations and financial planning. You're updating financial forecasts. And on a quarterly basis, you're looking at adjusting strategy deployment. At the value stream level, on the left side, you can see you have that strategy deployment process. You're using monthly sales operations and financial planning to understand capacity requirements and financial requirements. And you're using your value stream weekly meeting to check and adjust all this. Production control, daily lean management. You have your production schedule. You have your control boards. You understand causes of poor performance. You have your 2-level countermeasures. How do we have a short-term countermeasure to fix it today and then solve it long-term? And as I mentioned earlier, in daily lean management, if you can't solve a problem that is recurring, you sort of have to kick it up into value stream improvement. And all this is surrounded or leveled with standard work. So again, I just found it very interesting that these slides are still relevant after many, many years. All right, just to wrap up, you'll get a survey at the end. Please take it. Helps me better understand how to make these better. The other two value stream management webinars, May 21st is going to be about daily lean management, and June 25th is about improvement. Have the lean accounting certification courses that are out there that really help people assess their readiness to move into lean accounting. You have to take a test after every module, you get certified, and it helps you get ready for your implementation. So that wraps things up. There are no questions. If you have any questions, please feel free to send me an email and be up to answer any questions about this topic or any other topic on lean accounting. Thanks for attending. Thanks for putting up with my illness. And I will see you next month in our webinar. So everyone, please have a good day. Bye-bye.